Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, Dollar General. This one has just been a dog for the last probably year and a half or so. Just been getting pummeled. And you would think that, Megan, a lot of these discount retailers would do well in that high inflationary environment that we've been in over the last few years. But they haven't. They've done actually really poorly at this point. Do you guys have data that backs up the moves that we've seen, or do you see improving data?
You know, we have seen some weak data out of Dollar General specifically over the last few years, and I think that this correlates pretty well to its stock move. You know, the stock is down over 50% on a year-over-year basis. Investors worry about soft sales, increased markdowns. We know that these things hurt earnings last quarter. You know, consumers often complain about dirty stores and cramped aisles and maybe not the most hospitable staff. You know, those seem to be the main drivers of negative sentiment. But I can say, you know, on the bright side, we are starting to see some signs of life, at least in our data. Whenever we look at web data for Dollar General versus other peers, we actually have Dollar General leading the charge here with, you know, visits up by about 15% on a year-over-year basis. And we think some of this is driven really by two things. And one is we see a pretty significant trade down effect in play here, especially among mid and even low income consumers where, you know, whenever you get priced out of a Target or a Kroger, you might trade down to Walmart. Whenever you get priced out of a Walmart, you might trade down to a Dollar General. And we see this happening a lot. And we know even Walmart CEO came out and said, you know, although inflation's cooling, we do see consumers who are still really stretched. Their budget is stretched. By the end of the month, they're getting smaller packs of items. And so we think that this is playing into at least driving demand for Dollar General. And also for the first time, we see Dollar General at least adopting a digital strategy. You know, the company is testing out a pilot for same-day delivery, so trying to focus on that convenience. It's already partnered with DoorDash to, you know, so consumers can still shop same day for many stores, but now they're working on a pilot via its own platform, its own app. And so I think that Dollar General is certainly working to improve things and improve the overall experience for consumers and try to provide that value. You know, Dollar General has a lot of private label items. They've been really leaning into this, from groceries to cleaning supplies and pet food. And so I think that this appeals to perhaps a stretched consumer base. And really for the first time in a couple of quarters, we're coming to you guys with some more positive data than we've had in the past.
You know, Megan, I read about 4 different analyst notes on Dollar General. And a lot of, you know, I read about their labor costs are problematic, right? They've had to pay people more. Some of the inflation, both inflation prices are hurting their margins. And you mentioned the overall performance of some of the stores. My question to you is this just another company that Walmart is dominating and taking market share away from, like a lot of stores that Walmart seems to be affecting like that? And this is just, I mean, this is not a small company, but their stores are not big box stores. They're relatively modest in size. So is this something that we should look at? But every article I read, though, did say their valuation is extremely low. And so, like we've said before, no matter what the stock is, no matter what the company is, some point I want to be short, at some point I want to be long it. Are we low enough in terms of valuation, and is the data firm enough where this might be a tradable name?
Yeah, I think that you make 2 really good points there. And I think that the point on Walmart and Amazon and just at large is, you know, Dollar General used to have a moat and just its sheer, you know, presence of locations in these small towns and more rural areas where consumers really didn't have any other options. And now that bubble of the served area for Walmart, for Amazon, is growing larger and larger and creeping into those smaller towns and rural areas that previously were underserved, where consumers had no choice. They were going to stop at Dollar General on their way home, or if they needed to run and, grab a gallon of milk, that's where they were going to go. And so I think that that's a large scale headwind for Dollar General. But I think Dollar General is doing some things to clean up the stores. We've seen sentiment improving. The company's doing a better job of introducing fresh produce. It's implemented this new facelift strategy. I think it's called Project Elevate, where it is a lower cost version of a full remodel, but working to present those consumer favorites better to consumers. And so I think that there are steps that Dollar General is taking to combat the Walmarts and the Amazons, but it still has a large gap in terms of overall consumer experience to fill. But then, as you mentioned, the bar is extremely low. And for us, this is the first time that we're seeing positive traction. We like that Dollar General is finally embracing and getting into that digital game. And so I think that this could be the data does support, and our earnings score supports a bet to the upside on this one, more on doing a better job, not necessarily doing a great job.
Megan, when you guys look at this, the tariffs are going to have an impact on stores like this because their margins are so razor thin. They do have, 75% of the population in the U.S. is within 5 miles of a Dollar General. I didn't even realize that. They've got over 20,000 stores. But have you seen the impact? We've seen it in consumer sentiment and confidence numbers. Are you guys seeing any data that's saying that, hey, it's not just specific stores and specific things, that the consumer is starting to pull back on spending across the board? Or is it, hey, I'm just not flying anywhere, I'm not taking trips anymore? What are you guys seeing as far as that kind of data goes?
I think that we continue to see a very divided consumer. I think some of the names that have been most successful this earnings season have catered toward that high earner and that high income consumer who is still spending. And some of the names that haven't performed as well, whether you're talking about Walmart or Target or some of these other retailers, are suggesting a more tepid consumer. And so we're seeing a bit of two different groups here, but we do see Dollar General at least gaining some from that trade down effect from consumers who are saying, okay, I've really got to stretch this dollar and make this count. And they like a lot of the offerings that Dollar General has. I think Dollar General's private label strategy is smart. It's working to increase. I think it's adding 100 new grocery private label products just this quarter, up from 600 total. So, it's working on improving its array of higher margin items, but still has a ways to go. For us, when we approach this, we see this as, okay, we're finally starting to see a turnaround in sentiment data, and we're finally starting to see a turnaround in some of that web visit data. It supports, at least on our end, a bet to the upside, but this could still be a quarter or two out from fully taking hold.
Yeah, I definitely have never seen LikeFolio data with web visits on Dollar General above Walmart and Kroger at all. But great stuff as always, Megan. Appreciate it.
Thanks, guys.
All right, that's Megan Brantley, VP of Research at LikeFolio. Kev,